Welcome to Just One Thing, the real estate podcast where we cut the noise and get to the good stuff. I'm your host, Chaya Klein with One Real Estate. Each episode, I sit down with a guest who knows their field inside and out to talk about things most people wish they understood before diving into real estate or business decisions. Whether you're buying, selling, leasing, renovating, or just trying to figure it all out, this show is here to give you the clarity, insight, and confidence you need to take the next step. Let's get into it. Welcome back. I'm Chaya, and today we're going straight into mortgages, money, and the emotional roller coaster called buying a home. My guest today is Yael Ishakis, Senior Vice President and Branch Manager at FM Home Loans and FM Capital. For over 17 years in the business, thousands of buyers and investors helped, and a reputation for telling the truth about the numbers. Yael, I am so excited to have you here today.
I share that sentiment. But you said something, one untruth in there. It's 25 years.
Oh my gosh, I'm so sorry. 25 years?
Yeah, where'd you get that, ChatGPT?
I looked it up, maybe.
And yeah, I have to correct it. How do you correct ChatGPT?
We can get into the ChatGPT conversation, but if you talk to ChatGPT and you tell ChatGPT, I am Yael Ishakis and this is what I do, this is how many years I'm in the business, make sure my profiles are updated, it will update it for you. Yeah, okay. 100%.
And I know this is not on topic, but I got a referral yesterday from ChatGPT.
That's amazing. They told you that they looked up what?
A client called me up, says, hi, I want to make sure you do mortgages. Do you do commercial mortgages as well? I said, yes, I do. He goes, well, I got your name from ChatGPT. He said it gave him a list of professionals and his daughter's name was Yael. So he decided it's an omen. I told him his daughter has a great name and he's right.
Totally. That's hilarious, by the way. Yeah. That's hilarious. What's crazy is that we're using ChatGPT more and more for referrals. But when you're talking about mortgages, which is huge, that's amazing.
Yeah.
Don't ever change your name.
I'm not changing my name. I love it.
So Yael, tell us a little bit about how 25 years ago you got into mortgages.
Okay. So I was in high school and I got a summer job in a mortgage company and I was in like 11th grade and I started working and for some reason they thought I knew more than I knew and I probably pretended and I started working. And then I remember the guy, his name was David Cohen. He came over to me and he's like, you don't have to go back to high school. You don't have to go back to 12th grade. I'm like, I do. I have to graduate. He goes, all right, after you. And then in the summer, he's like, come back. So that's where I started. I started off processing.
Wow. Yeah. So basically you jumped right in and after 12th grade, you just started doing mortgages.
So yeah, after 12th grade, I got like another summer job. I was like, I want to go into real estate, I said. And real estate is a really hard business. I don't know how you do it. It's so hard.
It's a great business.
It's great, but it's hard.
It is hard.
And I started working and I just didn't love it. I didn't love it. I felt like I watched the realtors and stuff that I work with. They would put so much effort and then I saw them falling apart and it was just so...
But don't you have that in mortgages as well, where you work very, very hard and then at the last minute, things could still fall apart?
100%. But the realtors are the blood. They do it. They make everything happen. When I have a problem, I call the real estate agent.
Right.
Because it's their baby. I know that's the right place to call. They're going to help me fix it. The borrowers don't even understand. It's the realtors that do. The realtors are my biggest ally. And a lot of mortgage people, they tell me, oh, I hate the realtors. They're annoying. I'm like, you got to switch that. The realtors are your best friend. They put all their time, their effort, their everything into us. And I watch it. I have two sisters that are real estate agents and I see it and I know how hard it is.
Yeah.
Also, just if you think about it, a client, you have to create a client out of thin air. I don't. I get my clients from you. I get my clients from other realtors. My life is easier. You do the hard work. And it's not you. It's really a recognition to all real estate agents. I know how hard it is.
So that's really your feeder, the real estate agents, for the most part.
Yeah. Real estate agents are my ATM machine. Just press the little buttons and...
Totally. Easy.
No, it really is. Just think about it. You're a constant referral source versus like, an old lady. Okay. Then you have to cultivate that relationship and make sure she introduces.
Oh, it could be years. It could be years that we cultivate relationships.
It's years and it's a lot.
Yeah.
I also cultivate relationships and it's probably like a lot of fun in my business, but it's not I promise you, your work is harder. I know because I did it for 2 months. So
in the 2 months, it was enough to scare you
I'm a
off.
fast study.
But yeah, right. I think you are one of the most hardworking people that I know. You're always on. You are always on call. Were you always like that?
Probably not.
You have a great work ethic. You really do.
I always had a good work ethic. I always worked growing up. I always worked and stuff like that. So the work ethic is there.
Did you have to buy your own things when you were little?
Of course.
That's why.
Of course. Yeah, and
we're raising a generation of spoiled kids. Like, are they going to have this work ethic? No, because they're being handed things on silver platters.
I had to negotiate for the bigger latke. Like that was like, we had to use negotiation skills.
Right.
We're just sitting around the kitchen table. That's what it was.
Because your whole family, like you said, you have 2 sisters that are realtors. Everyone is really like hustlers. You all work hard.
I have another sister that does mortgages as well.
Oh, I didn't know that.
Yes. And I have 13 kids in my family and we're all hardworking. And we enjoy the hustle, respect it and love it,
Right. And I'm sure you all help each other also.
100%. That's part of our DNA.
Yeah. So let's talk a little bit about your journey. So you started 25 years ago, started as a processor.
So I was a terrible processor. The processor, they have to be extremely organized and meticulous and they have to be detailed.
Mm-hmm.
I'm not. I am by nature disorganized. I hate following calendars. I am not detailed. But when I made a mistake, my creativity fixed it. I would work double as hard and just fix it. So even though I really sucked, I really did. I was not good. The loan officer would request that I do the file because they knew it closed. If they told me I had to close back in the day,
you got it done.
I got it done and they knew
but
it.
Sloppily, but you got it done.
They didn't know that it was sloppy, but yes, it was horrible. But it was a great education because I understood it. Then I was able to
give you the background.
And I was also able to empathize with the client. Like, yeah, it's so annoying BS paperwork. It really is.
Right.
And I was able to understand why and explain it versus just being like that autocratic. When I was able to develop a rapport that way.
Right.
So I think
how many years were you a processor for?
2 years.
And then
I got married, moved to Brooklyn, and I said I want to become a loan officer. So then I had to suddenly find clients, which was difficult.
So how did you start? How did you start with your first few clients?
One client that when I processed, he loved me. And the loan officer then left the company that I was working for. He was an Italian guy. And I went to my boss and I said, he's referring his friend who should do the loan. And he goes, you could do it. And I said, really? I did a really good job. And then another friend came and I started working with their people. And then his mom was a real estate agent. So he introduced me.
And she started referring business over to you.
And that's how it was. It was initially word of mouth. And then I realized attorneys were really good referral sources. So I started cultivating relationships with attorneys. Accountants were good referral relationships. And I was one of those people that hated realtors also in the beginning because realtors are annoying. No, they're doing the job, but a lot of realtors are not respectful. So it's like a little annoying. So once you understand where they're coming from and you could develop a rapport, then it's actually phenomenal. But I could understand the hesitation why people are scared. So once I understood how amazing realtors are, then that's when I started pursuing realtors and my business blew up. But it took me time.
Okay, so let's talk about the process just for a little bit. What's unique about you is that you do, and you've done for me, a lot of residential deals, and you've done investor deals and also commercial deals. Most mortgage brokers are either commercial or residential, but you go on both ends. Let's talk on the residential side for a minute.
Sure.
What are some things that you wish residential buyers would know before they even reach out to a realtor?
Before they call a realtor, they should really know, can I afford this house?
Or how would they know, can I afford the house?
So the best way is really to call a mortgage person. A mortgage person can help them. Like when I do an initial consult with somebody, I don't ask them how much money they make really. I really ask them, put a gun to your head. What do you think you could afford? Or somebody's calling me and says, I want to buy an investment property. I'll be like, okay, great. That sounds like an amazing thing. How much rent can you get for it? And I'll try to do the backwards math with them so they could just have a logical understanding. I did a loan for somebody and he called me and goes, what can I afford? The guy made like $500,000 a year. So I was like, you can afford a very high mortgage, but it doesn't matter what I tell him. The fact that he sent his kids to a private school that was like $80,000 per child.
His affordability just went down. Right.
So it doesn't matter what someone tells you. You have to know your own numbers. It's like if you're buying a property because the location's amazing in your head, but the rent is low, can you afford it? Can you pay that mortgage? Can you afford the shortfall? Do you know that you're going to have expenses on this property? So I try to like walk somebody through it so they could understand the logical sense. And then if the logical sense works, then I'll go into the actual numbers. Okay, right. You can do this. The mortgage payment's going to be $5,000. How much do you make? Oh, I make $5,000 a month. How come you could do it?
Okay, 1 second. I have to stop you there. So how, because this is like the number one question that people want to know. How, in an economy like we're in today, are people affording to buy homes? Yael, you see their numbers. What is the secret sauce?
I don't know if there's a secret sauce. I think that if it doesn't make sense, people are not doing it. People get help. So let's take that person that I just said that their payment was like $5,000 a month and their tax returns show that they made $5,000 a month. But what was going on behind the scenes was they were getting supported and they had other stream of income that wasn't on there. So they were able to logically tell me, this is why I can afford it. So that logically made sense. So what we did was we put a cosigner on there and we made the loan work. But I had somebody tell me, he goes, don't worry, Hashem takes care of it. I was like, I know Hashem takes care of everything, but Hashem sent me to tell you not to do it. So that could be an answer too. I just do think that nobody should go into something that there's no rhyme or reason or there's no derail to have a way to do something. If they have a plan, do it, even if it's a little scary, because I do think houses appreciate and you don't regret it.
Right. But I'm saying you've been doing this 25 years. You see that real estate in general goes up.
Absolutely. And even I remember doing loans in 2008 and people paid high prices. And I remember I had a client in 2012 call me. He goes, I'm so upset I bought the property. I bought my property for $570. It's now worth $540. I remember meeting him in 2018 and I go, hey, upset person, how much is your house worth? And he started laughing. His house was now worth like 1.5.
Right.
Like, do you care if it's 570 or 540? Is that 30 grand going to make it?
This was a home that he was living in, meaning it was his own home.
It was his own home. And he was like embarrassed that he told me that. But I have a very long memory. I forgive, but I never forget.
You don't forget.
Yeah. So I was able to make fun of him, but because he was so freaked out about that 30K.
Right.
And he was like angry at the real estate agent. I'm like, the real estate agent pushed you to get the house. Does it make a difference to you now? Do you know the difference when you're going to sell your house for 1.5 or 1.530? It's a difference,
right?
You know, but house is usually the biggest purchase of somebody's life. So I understand the fear. It's very scary.
Right.
And yes, I had a client who told me that after we did all the work for them and everything, he's like, I found somebody else who's giving me $300 lower in closing costs. And I was thinking to myself, are you nuts? Like, what's wrong with you? Like, it's so difficult. We got you to the thing. And he's like, and then I realized, you know what? He really, every single dollar counts. I remember when I bought my first house and I had to borrow. Like, right. I understood him. I mean, I wish he would have asked me in a nicer way. And
right.
Obviously,
you would have tried to accommodate the $300.
Yeah, I would have, but obviously there's ways to do things. But I understood the underlying fear. And that's really what people get scared and they act all cuckoo.
So working with buyers, do you think that there's something responsible that buyers should do in advance? Like, you want to buy a home in the next 6 months, in the next year. Is there something that buyers should do to set themselves up properly?
It's a great question. So yes, firstly, credit. Credit is a huge one. Credit scores, rates. So if you want the lowest rate, work on your credit. I have people calling me that they're buying a house in 2 years. And we look at their credit and we say, hey, improve this. Or stop spending so much. Take out another. We tell them, give them little tidbits.
Right.
So credit is a huge one. People get paid off the books. Get on the books. Yeah.
You need to be on the books.
You need to show income. We cannot lend you unless you show ability to repay. It's ATR. That's what
you're saying. If they show you cash, it doesn't work.
No.
Right.
No.
I recently had a deal fall apart actually because the buyer had actual cash that they wanted to use. And the seller absolutely didn't want to have something like that. But they couldn't show it. It was very complicated and it ended up falling apart.
So if you have 2 years in advance, you can figure this out. So I'd say there's like 5 components. It's credit, income, assets, appraisal, which is once you find the house, and title. So the appraisal and title, the bank will help you with the appraisal, and the title, your attorney is going to order title, make sure it's clean. But the first three is under your control. Right. And that is something absolutely you should take care of. And that can help you. It could impact you in a very good way or negative way if it's not dealt with.
Right. Well, the most negative would be they wouldn't be able to get a loan.
Or that the loan would be more costly. There are loans today. Let's say somebody's self-employed will go off of the deposits in their bank statements or their business bank statements. And that's considered ATR. But the rates are higher.
Right.
So there are creative ways to do things.
Could you tell us some of the cool tricks that you have up your sleeve?
Yeah. I had somebody that got a very large inheritance. She was retired. She didn't work, but she needed to get income, right? She needed to show income to buy a house. So we spoke with the planners, whatever, and they set her up a trust and that she gets a certain amount per month, which the trust
now
had
that's
enough
showing
money.
income.
That's income. Like, there's so many cool things. You just got to talk to somebody. And I have met people who are delusional, but most people aren't. And most people do have a plan. This lady, she's like, I have so much money. I'll pay. That's how I'll pay. But it doesn't really work that way. So like we set her up and she called me up. She goes, it's so nice to know that I have this money coming in. I don't have to ask. Like she was like actually
even
grateful.
on her end.
On her end. Yeah. So like one cool thing, some people, if they are self-employed, I actually tell them, do the loan that's a little bit higher in rate. Because if you're writing off legitimate taxes and you can save the money, have more money for as a down payment, and I'm going off of bank statement deposits and I'm let's say I use a 50% deposit ratio and it completely qualifies, it's smarter to pay a little bit of a higher rate than
you're
to
better
pay
off
taxes.
in the long run. Right?
Yeah. So like, let's go through this. Let's plan it out. You can do a loan based off of this. Like some people get 1099. So most 1099 employees, they write it off. But I have a program that you could just look at the 1099 number and we take a certain percentage. Like I'm just saying, like there's so many different ways to skin a cow. And I think that it's important to talk to someone who's knowledgeable and could understand your big picture and just direct you in the right place.
Right. So basically, if somebody has some sort of income coming in that they potentially could pay those monthly payments and they have the deposit, you could be creative in figuring out how they can qualify.
I'll give you another one. Somebody was purchasing a property, an investment property. On paper, the rent that came in was, let's say, $2,000 a month. Mm-hmm. And his mortgage payment was like $3,000. So I was like, you're buying a stupid property. So a lot of people buy stupid properties we're
going to get into that in a second because you do investments, I do investments.
Right. And okay, so you would think it's stupid, but some people buy that because they think it's going to go up in value. Okay, that's valid. This guy's like, no, I have a huge lot. I have a contract with a trucking company and he was going to make much more.
Right.
It was like so inconsequential to him about that $2,000. So instead of doing a loan based off of the rent, I figured out another way. I just like to understand the story and then I'll figure out a solution for you. It just has to make sense.
Okay, let's talk about the investors because that came up for a second. Okay,
sure.
So everyone wants to be an investor and everyone wants to own real estate. It is the best place to park your money because like we said, real estate goes up. What do you think needs to be in place before you become an investor? We're not even talking big scale. Let's start small. Buying a small residential property, buying a small commercial property. I have people call me all the time with things that they're buying or things that they have bought. And sometimes I wonder, like, how? Why?
It's a great question. I want to tell you that I am myself a small-time investor, and sometimes I cry. And I'll tell you why. People don't pay rent. And they leave. They leave the place of wreck. And then I have to come up with $10,000 to fix it up. It's scary.
Yeah.
And a small-time investor has to understand that. Not everything is hunky-dory. But like you said at the beginning, it is a great vehicle to create wealth.
Passive income.
Passive income. Yeah. It's amazing.
So what do you think needs to be in place? Let's say somebody calls you and they have this great idea. They want to invest in real estate. They want to own real estate. What do you think they need to do for it to make sense financially on their end? What are some things that they should look out for in the properties that they're potentially looking to buy? So
I'm a numbers person. So I'm not going to be able to answer them based on their instincts or their gut that this is going to be the next best thing because I don't know. But
should you buy an investment based on your instincts? As a numbers person,
The answer is no.
Okay.
But I've seen people get very rich based on instincts. So I don't want to.
I wouldn't call that instincts. I would call it mazel.
Okay. But I've seen it. Numbers wise, no. But sometimes if they have some kind of logical explanation, I could get around it. But what I'll tell you when somebody's purchasing a property, I say, can it pay for itself? Question number one. Are you allocating enough money for reserves? Do you know that these kind of things happen?
And when you say these kind of things, you talk about tenants just up and leave. They don't pay rent. You have to evict them. These things cost money.
Things cost money. Also, people, small-time investors are purchasing from another small-time investor. They don't have to pay management, let's say. But you have a full-time job, so you're going to hire a manager. Do you know that they charge money?
Right.
So count that in your numbers. You have to verify what the seller's giving you. Seller's telling you the truth because they don't pay any. They shovel the snow themselves.
Right.
But are you going out there with a shovel? No, you might hire
a snowplow company.
And they cost money. Landscapers cost money. The old guy mowed himself. You're not doing that. There's a lot of costs involved, and you don't want to be stuck. And you have to really just analyze it. There's so many tools online. If somebody wants something, they can call me. I can send them an underwriting model for them to just plug in. Also, rates. People buy property, they'll take an adjustable rate. And I see a lot of people are in trouble today. They took a rate 5 years ago. The rate was, let's say, 4.25 on an adjustable. Guess what? Today, the rate's 7.5 on that same property. And the numbers don't work anymore. So when you're underwriting.
So what's the answer for somebody like that today? What are they supposed to be doing?
So the person who's stuck?
Yeah.
A lot of them are selling. The good thing about real estate is really does go up. Values do go up. And rents also go up. So that's also another thing. People don't understand how to be a landlord. They don't realize that you could give a 3% increase. You could. It's expected. But they don't, oh, they're such nice people.
I feel bad for them.
I feel bad. I feel bad for you because you don't know how to be an investor.
Right.
You get what I'm saying? So those kind of stuff, like you got to be knowledgeable of how to be an owner, of what to do, of how, where, and when. And if you can't, those people, like there's somebody right now, that person, the rate's too high, he's selling. He's actually
not probably going to make money.
Yeah, not making a huge profit, but he didn't lose.
Right.
There's always good, nice real estate agents out there that can sell your property.
That's true. So basically, set yourself up financially, make sure that the property covers itself, understand the expenses going in, the landscaping, the snow plowing, leave yourself money in reserves if the roof goes.
Also, a lot of people have this dream. They go, I want to go with no money in. Put a little money in.
Could we expand on that for a second?
Yes.
Is there that concept that you could be a real estate investor and really have no money in?
Yeah, you can borrow or raise other people's money. You could. I've seen it. But the people who are doing that, I don't think that they have real ownership. If something goes kaput, they have no skin in the game.
I hear that a lot from investors who will put money into other people's deals. A lot of the savvy investors want to know how much the actual purchaser is putting into the deal because they want to make sure that they actually have something on the line and they care.
Yeah.
There's nothing like having your own money in the game to really care about something.
100%. 100%. And then when you're putting money with other people, how much are you making on this? How much is your syndication fee? Find out. What are you getting yourself into? But aside from that, I do think that putting money into a deal and not teetering on the edge, it makes your deal a little bit more solid and safe, as opposed to saying, oh, I want to have no money in and just, there's really no such thing as a free lunch. There really isn't. Right? So it's, you put your sweat, put it in there, you'll be successful over time. But
there's that fine balance. Put money in, but don't stretch yourself to the point where you're going to make stupid decisions.
Yeah, 100%. I like to talk to people. I'm like, that's why I ask them why, when, how, where. And that's where you can get a gauge of what they're thinking and how, where, and when. I have a client now that purchased a property, and this was before ICE was strong.
Right.
And he told me now that he can't rent out. His tenants got so scared. I guess he had Hispanic tenants, and he can't rent it out anymore. So political landscape is something we should be looking at as well.
Right.
Just because somebody...
But I don't think it's something he could have anticipated probably.
No, but you can't say, oh, this guy's getting $5,000 a month in rent. Very cute. But if the comps are showing that everybody's getting $3,500, don't think you're going to be that person who's getting $5,000 also. And by the way, the reason why he got 5,000 is because he had 9,000 families living in that house. And just think about it. When you have 9,000 families living in a house, there's going to be a lot of wear and tear.
Yes.
He's not like the genius. Something's going to give.
Right.
That's what I mean to say.
Or he thinks that he's making all this money, but when they actually move out, it's going to be a lot of repair.
Yeah.
That's going to have to be done to the home.
100%. And now, unfortunately, ICE did scare people away. So there's people who banked on these crazy higher numbers that really didn't warrant it. They're in trouble.
They need.
Are you seeing that?
I'm hearing from people that they are having a little bit of a harder time filling up in certain areas with tenants. ICE definitely did play a factor. I don't think it's very strong in this area, but it's definitely affecting some people.
I spoke with a building owner yesterday. He owns, I don't know, probably 2,000-3,000 units. He said he wasn't affected so much, but he said that his apartments that was, let's say, renting for $2,300, he's now taking $2,200. He's had to take between a $50 and $100 hit.
Interesting. I think it really depends on what area you're in, obviously.
100%. But I'm just saying that's like a small scale, but it is,
Well, $50 to $100 per apartment, a couple hundred apartments, that's a pretty big hit.
I know, but I'm thinking about a client in particular. He was renting out an investment property for $3,000 and he can't even bring $1,900 in now. That's very significant.
That is very significant.
So, and I'm seeing it now in the Lakewood surrounding area.
Right. So I think on a single family home basis, you probably see it a little bit more than in the multifamily.
Correct. But I'm saying even on the multifamily, yeah, you're right. But you have to underwrite properly.
Yes. You have to underwrite properly. You have to leave yourself room because you never know. Like we could not have anticipated that.
Yeah. A lot of things we couldn't anticipate. But I do think that when it comes to your own home, like where you're going to move into, I understand that you're going to stretch a little bit because you'll figure it out. Your kids need a place to live. But when you have an investment property and you can't make it, something gives.
Yeah.
So I don't believe in that.
Well, the investment property has to cover itself. A personal home, you could afford to pay a little bit more because the numbers don't necessarily have to justify themselves. Correct. You just have to be able to afford it.
Correct. So like people call me sometimes and looking at their owner occupied house as an investment, I laugh. I'm like, it's not an investment.
That's not the way you underwrite it. Right. You don't underwrite it.
No.
You don't underwrite it. You just make sure you can afford it. If you don't
Can you afford it? And do you need a place for your kids to live?
Yeah. A good place in a location that makes sense. Yeah. Sometimes people think that they're saving money if they go to a specific location. And then 6 months in, they realize this was a terrible idea and their kids are so unhappy, they'll sell and buy somewhere else.
Do you see that often?
Not often, but I do see it where people say, I could be a pioneer. I can walk 30 minutes to the shul. It's totally fine. And they could, but they forget that their kids really need to have neighbors and friends. And it's very important. I recently had somebody who had a beautiful, beautiful, beautiful home and their kids were really miserable and they became their kids' best friends because they felt so bad. And it was very hard. They sold, they bought a smaller house in a community where there's tons and tons of other families with kids, their kids' ages, and they're thrilled. The house is not great, but the kids are happy. So they're happy.
I completely understand that. It makes a lot of sense to me. So I think that's a great story to tell people. Sometimes the grandeur of a house, people get very excited about it, but they don't realize that there's so many other implications.
Absolutely. 100%. Okay, let's talk about once you have somebody who is already in contract and they come to you, what are some mistakes that can blow up their deal, whether it's an investment deal, whether it's a personal home?
Okay. So the biggest problems that I've seen blowing up deal, we're going to go down to the three aspects that we discussed initially, credit, income, and asset. So big problem is when I qualify somebody, I'm looking at their income. I'm looking at let's say it's an investment property, the future income of the property. And then I'm looking at their existing expenses. So your car loan, your car lease, your student loans, your credit cards. So I was doing a loan for somebody and he decided to buy a plane and he had a $20,000 payment. Blow up the deal.
Yeah.
So he thought it was great to buy a plane. I thought it was a lot of fun. It sounded great also to me, but you have to be careful about new purchases or leases. Okay, the plane was an extreme, but it just happened and I thought it was funny.
Yeah, but because it's not every day that your clients buy planes.
Yes,
sure.
Correct. But the one that I see a lot is that they get a new lease and they're like, oh, it was just $200 more. Honey, that $200 killed you. So the leasing, the loan, or Want another one? Co-signing. I just took out a car for my kid. It's killing you. So the way it works is if you co-sign, if you can give me 12 months proof that the other person pays it, it's good. Then I'm okay. But if you're 11 months, it didn't work. Or if that person was late once, it doesn't work. So that's one factor. So a lot additional debt. So I'd say that. And I've seen it. We run something called a credit refresh 10 days before the closing. And we have to run it. So
how many times does that hurt you?
A lot. I've had loans that nobody understands why everybody's screaming, yelling, you had this loan for 3 months. You never told me it's a problem. I'm like, yeah, it wasn't a problem until today. And I saw the guy has now another, I don't know, $1,000 in debt and I don't know what to do. And like now suddenly became my problem.
Right.
And everybody's yelling at me. I'm like, I need help. But those are the type of things. So on my end, I try to run the credit refresh 10 days before, like, give me some time to fix this problem. Get a new cosigner suddenly. I don't know, do what I have to do.
People really don't realize. They really don't realize they're in process. They're buying a house and then they just need a car. So they get a car lease.
They don't realize. And I tell them, we tell them during the initial consult, they don't listen. So we have the credit part. Want to know another one? Somebody didn't pay a bill. He just didn't pay his credit card. So we run a refresh and we see it late. When you see it late, you have to run a new credit report. Score was 790, went down to 640. He had a rate of 2 points higher. And I'm forced, I don't make money giving this person a higher rate. My heart's crying for him and he's over his mortgage contingency. I can't even back out. So pay your bills, please. Then income. I have one now. Somebody was working as a therapist, W-2'd. They got a much better job. Much, much better job. She was making like 90. She went to make 120 or 130. Mm-hmm. Guess what? The new job was 1099. 1099
changes everything.
Changes everything. You have to be working 2 years on 1099.
Wow.
So
what do you do in a case like that?
I begged her to go back. Her old boss didn't want to. I actually got on the phone with her new boss, said, please put her on W-2. The boss agreed. But I had to get on the phone with a boss, begging them. Like, it doesn't make sense. Or we get a co-signer or something. I should have
introduced you that your job description is, I will do whatever it takes and get on the phone with your boss,
right,
to get your loan done.
Exactly. So people switch like positions. It's really better for them. Like, I understood her.
Right.
But really,
but not during the process of getting a mortgage.
Let's talk about real estate strategies where a lot of real estate agents say, oh, get this house, but let's waive your mortgage contingency. A mortgage contingency is there. So if the person can't get a mortgage, they can get their money back. I like a mortgage contingency. I think it protects the client.
I'm sure you do like mortgage contingencies.
Okay. How about this? During COVID, I had a client. She was in contract. We had a clear to close, ready to close. Guess what? Her husband died. And the seller, she didn't want to relocate. She was moving. She didn't have a mortgage contingency. In COVID, you couldn't even get one.
You couldn't even get a mortgage. Right? You had to waive everything. You literally had to give away your firstborn to get a deal.
Correct. And she was crying on the phone to me and she's like, I'm not moving. And I remember getting on the phone with the attorneys and the realtors. And I'm like, you got to help this lady out. It's not malicious at all. This is really bad. And she ended up losing her down payment because nobody cared. After that, one of the attorneys told me he started putting a clause into this thing in case of a demise, he can get the money back.
I have seen that in contracts.
And I thought it was so important. I saw it firsthand.
When you see those type of clauses, you know that somebody has gone through that experience. That's been my experience. Whenever you see something that catches your eye, you're like, wait 1 second, that's different, that's unique. You know that somebody went through an experience and they're incorporating it. That's a smart attorney.
Yeah. Yeah. So those type of things, you can't control if somebody's going to pass away. I had it once that they were fighting so much they decided to get divorced. I'm like, not when you're buying a house. Can you stop the fighting? You know what I mean?
Buy the home, close the deal with me, and then you can do what you got to do.
Then do what you need to do. But those type of things, like, and I understand buying a house is a high stress environment.
Yes, I get it. It is one of those on top of the list.
It is. It really is.
The dark side.
Please don't do it on my end, on my side. So that's what you could avoid. The credit part, the income part, don't do job switches, don't get fired. Please don't be nasty to your boss, Please don't do stupid things. And then assets. Assets is another huge one. We ask everybody up front, where are you getting down payment from? Oh, I have it in the bank. I'm getting a gift from grandma. Please don't get into a fight with grandma.
Right.
She's not going to give you your gift. I had it once where a guy got into a fight with his father-in-law and his father-in-law said, I'm not giving you the money. And guess what? He lost his down payment. He didn't have a down payment because father-in-law, rightly so, because when I heard the whole story, I agreed with the father-in-law, didn't want to give him the money.
So basically, during the period of wanting to buy a home, don't rock the boat with any of your relationships that you may need
Yes.
in order to buy the home. Not your boss, not your in-laws, not your co-signers, whoever it is.
And also another thing that I see is when you're getting a loan, you have to source your down payment. A suitcase of cash is beautiful. I want it. Please, you can share with me. But that's when you want to go to Prada. You can't just deposit a stack of cash and say, oh, I had money in my mattress. It doesn't work that way. We have to source it.
You'd be surprised how many people don't understand that.
Yeah. So if you have to, we source it. Generally,
just explain what that means. You source it.
So we have to look at, the rule really is 2 months bank statements of where the down payment's coming from. Or we actually could go through Freddie Mac that only requires 1 month. So I'll evaluate a situation. If I see large deposits, I'll say, okay, we're going to go Freddie because they only need one. And then I'll tell the client, do not make any large deposits that you can't source. When I say source, let's say I'm doing your loan and I see a large deposit or a wire or a Zelle or something, I'll ask you where this money came from. You're not allowed to borrow money for your down payment. So if you say, oh, I borrowed it, honey, that's not usable. I can't use that money. So everything has to be strategically thought out. And there's so many mortgage advisors. Everybody knows the rules. It's not rocket science. It's not like you were throwing you in an oven, you have to navigate it out.
Right.
It's there. It's all up front. It could all strategically be done without a headache. And then when you're getting money from somebody, I had one now that the donor refused to fill out a gift letter. I'm not filling out a form. I must have a gift letter.
Right.
Otherwise, it's not usable. It's like those type of things. Should I tell you the rule? And let's say somebody's making $5,000, $10,000 a month, up to half of their income has to be sourced. So if someone's making $5,000 a month, they can deposit, let's say $2,400 without me asking why, when, and where, and how.
Where that came from. Right.
Yeah. But if you have multiple deposits like that, don't think you're so smart. I'm going to ask you because I'm going to see a ton.
So basically, before you buy a home, if you don't want to blow up your deal,
talk to a mortgage
during contract, make sure that your finances are lined up. Talk to a mortgage professional, see what you should not be changing ahead of time. This is for anybody. This is for an investor as well.
Of course. And just to let you know, investors even harder because a person purchasing for their primary residence is allowed to get a gift. An investor can't.
You have to come up with all that money on your own.
On your own. And usually they want to see reserves as well. So you got to think it out and plan it out. And it's not so hard. The money's coming from somewhere. You're buying the house, you're coming up with the money. So it's not like you're not going to come up with it. So the banks wants to see it. So think it through. Stop yelling at the lender. It's not their fault. They want to help you. And just be smart about it.
Absolutely. Stop yelling at the lender. That's the biggest takeaway here. What is the biggest mortgage myth that you'd erase?
The biggest one is that people think that they have to put down 20%. No, you don't. You could put down 5%. People think that you could only put down 5% if you're a first-time home buyer. Not true. I have a client that buys, the term is called house hacking. He puts down 5% every year on a new home, and he lives there for 1 year. I do a loan for him every year. And he calls me day number 365, and he's like, I'm looking at a new house. I'm going to sign a contract. He owns about 14 houses already. And every year he puts down 5%, buys a new one, and he's creating himself an empire. Now,
that's amazing.
It's amazing. Now, I couldn't do that. I don't think I could pick up my family and move to a new house every year. He has a dog, and he's very happy to do that. He doesn't care, and he just wants to build an empire. I think that's a cool thing.
Yeah.
And everybody, probably, if they put their mind to it, could save 5%. So,
yeah.
And that's another big myth. People think that FHA is a better loan. I love when people call me and they go, I want an FHA loan. I'm like, why? They're like, oh, I read online, it's better. Yeah, FHA looks better. You could put 3.5%, but do you know that you're paying 2 points almost to get that loan? And they're just building it into your price. Do you know that you have mortgage insurance for the life of the loan that never goes away? I think a smart person is when they recognize that this is not my area of expertise.
And let me ask the person who's.
And let me ask her, what do you think?
Yeah.
Give me options.
Yeah.
And then go through it as opposed to dictating to somebody and telling them, oh, this is what I want to do. Honey, you don't really know.
What's one thing that you wish every realtor understood? You said you have a great relationship with realtors, and you do. What's something that you feel like is important that they don't get?
The realtors that I work with, the caliber of realtors, I think they get it. What would I tell like a newbie realtor to also understand that the mortgage person is your friend? A lot of times there are mortgage lenders that for some reason we're conditioned that the realtors are the bad guy. Just get them to understand, is the file approved? Like, did you run it through Fannie Mae? There's something called the AUS system. We run every file through it. You have the approval. Don't guess. A lot of mortgage are like, yeah.
Right.
They
don't actually fully approve them. Right. When they get a pre-approval, it's not, they didn't actually run their credit and fully approve them. If I had to add something in there, if I was telling a new real estate agent something from a mortgage broker, I think it would be that the relationships are probably the most important from the real estate perspective, because you really give us a head start in knowing this person actually qualifies. We're going to get the loan done, or you're wasting your time over here.
100%.
And I think that's very, very key. I think it's also key for the buyer. You're wasting your time. You can't afford this. Let's look at something else.
Yeah, 100%. I'll tell you a story. There was an agent, a seller's agent that I had a good relationship with. And she called me up and she goes, I have a cash offer and I have your pre-approval here. So I said, which one are you going to take? She goes, I'm taking your pre-approval. So I said, lovely. My clients are amazing. But why?
Yeah. So
she said, because I find your pre-approval better than cash. She goes, the reason why is because you communicate with me and you tell me every week what's going on. And if there's a problem, you'll let me know. Cash person, they're most likely taking a mortgage anyway.
Right. And
I don't know what's going on. So I know yours are real and I know you're communicative. And to me, it was like the ultimate compliment.
But there's so much truth to that. There's so much truth, because many times when people come in and say that they're doing cash, they represent that they're doing cash, but they want the ability to take out a mortgage. So it's not contingent. But then you don't know what's going on in the process. And all of a sudden it's like, no, we need another week. Why? You're a cash offer.
And that could schlep for 3 months, 4 months. And somebody, who's paying the taxes on it, the seller. I have one now. Seller called me telling me, like, as a friend of mine, she's like, I took a cash offer. I moved, all these things. And the buyers just are playing games. So that would be a savvy, experienced agent, understanding that.
Yeah. Let's end off with your favorite, if you have a favorite success story, something that still motivates you today to continue doing what you're doing.
Oh my gosh, I have so many. One of my clients long time ago came to me. He was in foreclosure. At that time, there was something called a foreclosure bailout loan. And I actually worked on his foreclosure bailout. His kid was sick, and that's why he went into foreclosure, because he didn't have proper medical insurance. And he then showed ways how he's going to rectify it. And he got a foreclosure bailout. The rate was like 12%. And he closed on it. And then after a year or 2 years, we refinanced him. And he got a better rate. I think at that time, the rate was like 8%, which was very good. And then he started doing better business-wise. And he bought an investment property. I closed with him 2 years ago, $120 million building he bought.
Wow.
And I love it. To me, it was like a rags to riches story. And he lived in a tiny high ranch, that foreclosure. He now lives in a beautiful home. He actually built it and he's successful. And I feel like every single person in the world has a chance. Real estate is amazing. You can really build wealth, and there are mistakes that can be made. As long as you learn from them and don't repeat them, you can really start over. Everybody can. And create an amazing life for themselves and help others. By the way, this guy helps so many people and pays it forward. So to me, it's like a beautiful story. And I love those stories. Yeah. And, always staying humble and remembering their beginnings and just going on.
Yeah. Thank you so, so much for your time today. This was educational. And I hope that people will actually take that one thing and either buy their personal home or buy investment homes, many, many investment homes, and actually learn something from what we discussed today.
I can't wait to see you tell me that somebody listened to the podcast. They did the right underwriting, obviously, and they bought the first, and they built an empire. And, maybe they'll mention you when they're written up in Forbes.
Thank you again. It was a pleasure having you.
Awesome.
That's it for today's episode of Just One Thing. If you've learned something new, feel a little more informed, or know someone who definitely needs to hear this, pass it on. Be sure to subscribe so you don't miss future episodes. We've got more great conversations coming your way. One topic, one expert, one thing at a time. Until then, Keep learning, keep asking questions, and remember, it only takes one thing.